Hi there and welcome to this video where I want to show you the results of the forward tests that I've done over the last 6 months with 9 bots and therefore 9 different trading strategies. Do these strategies outperform the market or not? We will see in this video. During the last years, my main focus was to find the best trading strategy, and in this period I found some very promising algorithms that I also could use with a trading bot. Using a trading bot has many advantages over manual trading, like 24 hours trading and taking every trading opportunity there is. It will also leave behind my human biases and the negative psychological aspects of trading, in the hope of course that it will make my life easier while still pursuing life-changing wealth. But the proof is in eating the pudding, and forward tests in the real market give a way better view on the actual performance of a trading strategy than backtests do. So therefore I'm going to show you my dry running bots and how they have performed over the last 6 months with 9 different trading strategies that in theory have high potential to make lots of money with bot trading. I started some of these bots at the start of December 2024 and also some at the start of February 2025. And I couldn't have started these bots at a worse moment than these, because there were some high peaks that I was starting these bots on, but then we experienced the very large drawdowns over the large crypto markets in these last couple of months. And from these peaks the total market dropped around 38 to 40%, and then I'm not even showing the huge 90% drops of some of the altcoins in this case. Besides the potential of life-changing wealth that these algorithms could make, I also believe that trading strategies or algorithms should be able to endure market drawdowns too, and this is actually a good test to see if this is the case. Anyway, as earlier said, these bots were started in December 2024 or February 2025, and all these use the volume pair lists option, which means that if a pair is trading above a certain volume, it is eligible for trading. And if it also has a trading signal, meaning that the rules of the entry are met, then the bot will trade the pair too. Each bot also starts with a nice amount of 1000 USDT, which is the default amount for dry running the trading bot. I only use some of the best performing algorithms that I have found over the last year or so. So if you want to know more about these best trading strategies and the results of their backtests, then I recommend you to visit my website, because I have a complete overview of all the strategies I tested so far, with the links to my YouTube videos where I present my testing results, and the full reports of the backtests, including the actual code of these strategies. So without further ado, let's see what these actual trading results are, because many people tell you what they have done when they are successful, but will they also show you the results when things go not as good? These are real trading results, albeit with dry running, because I don't want to test with real money of course. I'm not that crazy. But if you know people that do like to test new strategies with real money, maybe yourself, then write it in the comments, because maybe testing with real money may have some advantages that I'm not aware of. Let's start with the first bot. Oh, and before I forget, all these strategies are running on the 5-minute time frame, so the 5-minute time frame is dominant here. The first bot I want to show you runs the NFI5 Moho WIP strategy. And this strategy currently sits at the top of my current strategy league. And what you see here is that it has a 79% win rate, but nonetheless it has a huge loss experiences since its inception. Its drawdown was maximum 87% and it stopped only recently. The best pair was PHA with a total profit of $79, but if you go down this list you will see that since the start of the bot it traded many pairs already. And this is all the result of using a volume pair list. When a pair reaches a certain volume, which could be the result of a pump and dump scheme, but that is just an assumption of course, the bot trades the pair. Another negative aspect of all this pair trading is that it can also lead to dust in your account. And dust is the small untradeable amounts of money, or crypto pair amounts, that were not sold and now sit in your wallet. And you are not able to sell these because of the amounts, because they are too small. That's why they called dust. After a couple of months forward testing, we see now that the total amount of this bot's balance is negligible. In other words, the best performing trading strategy in the backtest has pretty much blown its account balance. Game over, try again. And you might now wonder what makes this strategy perform so badly, even with a 79% win rate. Well, if we see the dashboard, we find loads of small wins with different close reasons. And percentage-wise, these amounts of winning trades are pretty large. But if you see all these stop-loss signals and the amounts they are losing, they can sometimes be larger than 10 or 20 times as big as these small wins. So you have to win 20 times to negate such a big loss. You can see here that there is even a loss of minus 54%, and the algorithm just wasn't able to stop at a smaller loss here. So you see that fine-tuning your stop loss is absolutely vital for a strategy that keeps its money. Let's move on to the next trading strategy, which is the NAS version 4. This bot was also started in December 2024, and its ROI is currently minus $612 USDT. This time the bot has a win rate of 83%. This looks good, but with an expectancy ratio of minus 1.25, this means that for every dollar of risk you are losing $1.25 on average. And this means also that your losses are not only consistent, but larger than your risk per trade. The drawdown was also almost 70% too in this case. And also with this trading bot there is a huge list of pairs that were once traded, of which many only a couple of times. And again, the same image here with these trades, many small gains, some large losers, but enough to let this strategy almost blow up his account. The cumulative profit here shows that after a successful start at the beginning of 2025 and in the end of 2024, and around January 2025 the market went down and it took these two strategies with it. Let's see if the next one performs better. This bot uses the Arcane strategy, and it was started at the end of December 2024, and it shows mid of me the same picture as the other two strategies. A huge drawdown of 78%, expectancy ratio of even 1.86, and a current balance of 260 USDT at the time of this video. Some pairs do actually perform very well, like Fuel that has over 105 USDT of profit, but overall the strategy is not good at all. While in backtesting over a long time period, including bull market circumstances, it performed quite well. But not during these times though. And if we watch the cumulative profit, it looks like the trend is slightly going upwards again here, but then these huge stop loss hittings should be altered to give the strategy a chance to survive in these market conditions. The next trading strategy is to investigate the Bollinger Band Real Pullback. And here we have a pleasant surprise because this trading strategy didn't make as much losses as the three earlier ones. In 376 trades, it only experienced a loss of 214 USDT, and therefore its maximum drawdown is only a mere 27%. Now with a win rate of 78% and a profit factor that stayed below 0.7, this could mean that this might be a profitable strategy for the future. Again here, a huge list of pairs that were once traded, with a high chance of leaving traces of dust on your account. But let's take a look at the dashboard to see more about the individual trades and the equity curve. Now this Bollinger Band has a good start at the beginning of 2025, but it wasn't able to sustain that when the markets went down. Although it isn't so bad as the earlier trading strategies, the whole thing here is that in this case too, a high win rate with small amounts of wins do not make up for those rare but large losses this strategy has. And taking a closer look at the equity curve shows that there were times when the bot waited for better trading opportunities, showed by these flattish periods, which in by itself is good because also trading algorithms need to know when to trade or where to wait to get better market circumstances. The next trading strategy is the Elliott V8 Original Itchy. And this strategy was started halfway through February and also has negative results. Not as bad as the first three, but I think this is mainly to do with starting the bot later. The win rate of 71%, the expectancy ratio is 0.54, which is less severe than the 1.25 example earlier, but these kinds of numbers will still erode your account over time. The profit factor is 0.68 and the max drawdown 23%. Again, this is a large list of pairs traded, and if we open the dashboard, we can see something very peculiar. The strategy did nothing for a whole month and then started trading again. Now I don't know if this was intended in the algorithm or not, but it's very strange to see. And after being activated for some reason, The trades started happening again, but again with the same results as the previous strategies. 2 large stop losses and 2 small profit takings. With this algo, the trailing stop loss did most of the profitable trading, besides some exit signals here. And the stop loss and ROI made this strategy lose most of its money, just as with the older strategies. And now that we know where to look for and what most causes are for wins and losses, let's go over the last 4 strategies a little bit quicker. The next strategy is the Obelisk Ichimoku-zema, and this strategy was also started in February this year. It has a negative ROI of minus 166 USDT, an expectancy ratio of minus 0.28, a profit factor of 0.86 and a max drawdown of minus 28%. It uses a volume pair list too, as you can see here. And its exit signals caused most of the winning trades, and losing trades too, by the way, with the exception of hitting a stop loss now and then, losing around 30% for these trades. The equity curve doesn't look that bad, it actually hints at a reversal and winning trades again, but we will have to see what the overall market does to find out how this strategy will perform in bullish circumstances. The next trading bot runs the combined NFI 7, and it also started in February and looks to perform better than the previous 2 bots in terms of keeping losses to a minimum. The cumulative plot of this strategy shows many periods in which no trades has been made, which is good in my opinion, because I better have no trade than a losing one. And I'm sounding like a scratched record here, but the stop loss settings are the main culprit of the large losses. Winning trades are made by different exit signals that are part of this trading algorithm, like a signal profit 0 or a signal profit UE1 and so on, but the width of the stop loss is way too large. Let's move on to the last 2 strategies I'm testing so far. The first one is the SMA Offset Protect Opt. It also started in February, by the way, and it looks to be a strategy that managed to keep its losses to a minimum. It only traded at 128 times, while other trades more than 500 times. And by keeping the amount of trading to a minimum, due to the strategy's rules of course, the drawdown is only 8%. The expectancy ratio is 0.36 and the profit factor 0.84, which is doable under these negative circumstances. Now, because the trading strategy didn't trade as much, the list of pairs is also limited because of this. And this shows us that sitting on your hands, especially when negative market circumstances arise, might be the better option here. It's also clearly visible in the equity curve. After the execution, this strategy did no trades at all, just like the Elliott V8 strategy. Now I think that this is not an error, and I think that in both cases there are rules that state to not trade under bearish circumstances. And as you can see here, in the last couple of weeks the bot got active again and started to trade. I also have the idea that this strategy is the first one that attains black numbers again, meaning that it is profitable and not underwater anymore. Now the final strategy I want to show you is the Rally version 1. It was also started in February and has a ROI of minus 330%. It has also one of the lowest win rates of 62%, a large negative expectancy ratio of minus 1.48 and a low profit factor. And just like the other bots, it has a large list of used pairs due to the volume pair list. But what's most interesting here is to know that this strategy as well is that it looks to use similar rules to spot bullish and bearish markets. It did nothing for a whole time, and after staying dormant, it suddenly got a signal that bullish circumstances appeared, making the bot active and starting to trade again. Now the losing trades are not only caused by the stop loss in this case, but also come from the exit signals and the trailing stop loss. Nonetheless, and now for the last time, a few large losing trades negates all these small winning trades, and therefore we can conclude that no strategy at the moment is making us money. Aren't we glad that we didn't use real money here? Now we have seen that all these initially great performing strategies in backtests are actually not that well performing in the real markets at all. But let's be honest too and give them some credit, because there is a huge dip in the market. And I wonder if any other trading strategy just didn't experience some kind of drawdown during the last couple of months too. Now, not count of course the short trading strategies, because they would probably have done well here. But I mean the only spot trading strategies. All in all though, I think that we can get some very important lessons from this exercise, and I've summed this up in this conclusion list. First of all, trading with a bot and an algorithm or a trading strategy does not guarantee success, even if backtests have shown that it looks to be a great trading strategy. I have said this earlier, but I will say it now again. The greatest drawdown that you might experience is still ahead of you. The second thing here is that trading with bots and algorithms look to be very easy, but it might even be harder than manual trading, because besides the extensive research and tests you have to do, you also have to have faith in your developed trading strategy, especially during these market circumstances. Trading algorithms might have the potential to make you huge gains in the market, but it will also test your patience and nerves when they do not perform as expected. And the other thing that might sound contrary is that you also have to have the courage to stop an algorithm when it performs bad. At these moments you might have to admit that they have lost their edge and they only performed well during the backtests. Another lesson here, which is very clearly demonstrated in this video, is that time in the market is key, but timing the market is equally important. You saw that I coincidentally started the bots at the heights of the last couple of months. And from those peaks the market only dropped further down below. And these have resulted in drawdowns right from the start. The results could be completely different if I started the bots at the lows of the last bull cycle. And although those could be facts too, it would only show you the positive side of the coin, which was also shown by the backtest results, by the way. This time we saw the negative point of these trading strategies. Now concerning the trading strategies themselves. I will not argue their trading rules here, but what I do find very tricky is the fact that they all use very large stop losses. One of these large stop losses will blow away all your hard-earned gains over multiple small wins. And I've said this in earlier videos too, do not stare blindly on win rates. If a 95% win rate with a large amount of small gains gets blown away by the 5% of large losses, you might still end up with a losing strategy. In other words, your risk management is absolutely vital in this case, and it is proven that these strategies could be very much improved on their risk management. What is shown by others, and that includes me, is the result of their personal investigation. Always stay skeptical about what is shown and always do your own research first before using any trading strategy. And always use money that you are willing to lose. Some smoke, some gamble, some drink, we trade. Now, I hope that this eye-opening video has given you new insights into how trading works and that you also have to be aware of the risks involved. If you have any negative experience about trading or you have some hard-earned lessons to share, then please add these to the comments so that other traders can learn from your experience as well. For me, these findings will not hold me back from searching for the best trading strategies there are. And if I find these, then I will add them to YouTube and to my Patreon site. If you like the video, then click like and subscribe if you haven't already done so, and I will see you in the next video. Goodbye!